It's 2025 and it's time for me to update my YouTube channel about a topic I've been really interested in lately, which is about the individual stocks that spiked after COVID stimulus happened, COVID inflation, and then subsequently crashed and now are coming out of that crash. I'm going to go through some charts here to show you what I mean. So here's Palantir. You're going to find this is quite common. In about 2021, there was sort of this individual stock bear market that happened right in this area. And if you just quickly do the math here, you can just see how sort of, big this drop was. This happened across thousands of individual stocks. Some of you probably were impacted by this. So if you look here, Palantir dropped 77% during this individual stock bear market. So in 2021, it was up here at 27, all the way until almost essentially 2023, it went down to $6 a share. So absolute destruction, a 77% drop. Another one that you'll probably remember is Carvana. So Carvana was a COVID darling. I mean, look at this COVID run up here. Massive. It was the new age way to buy cars. Look at this chart. From $25 a share to over $350 a share. But the reason why I'm recording this video is because between Palantir and Carvana, take a look at what's happening here. From its highs down to its lows, it dropped 99%. 99%. I mean, it's like the market just suddenly thought all these companies were going out of business. It's kind of insane, actually, how overly bullish everyone got on the run up. And then overly bearish everyone got on the rundown. It was, this company's changing the world. This company sucks and it's gone forever. But what's happening now is some of these companies are actually crawling out of the mud. So if we take the low here on Carvana up to that recent high, it's a 9,000% move. Unfreaking believable. You just don't see this very often. And they crawled out of the mud. They were an underdog. Everyone thought they were dead. Everyone forgot about them for 2 years. They just traded down here doing nothing. Everyone thought the story was over. But America loves comebacks. America loves underdogs. That's kind of what we're built on, the underdog spirit. Anyone has a chance to make it. You can get rich, go broke, get rich again. You can win, you can lose, you can win again. It's just like it's embedded, and it's beautiful, by the way. Like some people really do find drive when everyone's counting them out, when everyone's doubting them. So Palantir is one example. Carvana is another example. And it's quite interesting to see this story play out. Another one is AppLovin you could consider. I mean, AppLovin is now up so much you barely even see what was actually going on. But look at what happened here. There was this IPO event here in 2021. It went as high as 100 during the main COVID mania, and then it crashed. And at one point was down to about $8 or $9 a share. So very similar to Carvana, it was just crushed. If we click, we're down some 90% from the highs. But check this out. You give them enough time, they prove their model, they're real, they're not, messing around. They crawled out of the mud. Everyone thought it was going to be a 0 when it got to 9, and sure enough, it's up 3,000% off its lows. These moves are really interesting to me for 2025 because what it illustrates to me is a number of things. One, the pessimism and the bearishness and all that whatever after the COVID spike across these individual names was clearly just way too aggressive. Also, the other aspect that's interesting here too is that there's opportunity as well if you think you can find some companies that maybe fit this similar common pattern that's setting up. So another interesting one that I was looking at the other day is Twilio. In fact, you can even see I was just drawing some fib retracements here. If you look at the Twilio chart, I'll just turn log off. It was up an enormous amount in COVID. You could just see really quickly here, 455%. Then after the COVID, spike in euphoria, it's down 90%. Twilio's down 90% in 2 years. And then if you take a look what's happening here, you can kind of see is something brewing again. Now it's up 150% off the lows. I don't know how much higher it will go. I'm just saying it's another example of this story that seems to be unfolding time and time again. Now, there's plenty of companies that still have not made it out of what I might be calling the great post-COVID comeback. Zoom is one of them. Zoom, I think, is the poster child for COVID software taking off. We can even see that here from its lows to the COVID highs. It was up 800%. Just truly a run for the ages. But once again, if you take Zoom from its highs and looked how low it got here, it was down 90%. Basically, Zoom was on its way to zero. It was trading even below its IPO price. People thought it was done. Zoom is still widely used. There's just no doubt about it. In fact, I was just looking the other day, and Zoom has $7 billion in cash on its hand right now. So it's like a market cap of $25 billion. And if you just go to net debt, because I just want to make sure they don't have any debt, you can see here they have $7 billion in cash. Now it shows negative. I know it's a weird way to write it, but it's how TradingView displays it. And $7 billion is what they have in cash. So net debt, they don't have a positive number. They have negative $7 billion. So they have no net debt. It's just cash. $7.6 billion in cash. And their market cap is what exactly? Their market cap is $23 billion. So almost 50%, 40% of its market cap is in cash. Super interesting stuff is going on. And I would add to that this story does go deeper as well. Because what's especially interesting is that if you go to the S&P 500, I'll use a different ticker that I don't have so many drawings on. The S&P 500 never really suffered nearly the state of the drawdown as these individual stocks. So you can see here there was a drawdown from 2022 to the lows. It suffered a 23% drawdown. So we saw the stocks go with it. Carvana went down, Zoom was down, Twilio was down, App was down, Palantir was down. Oh, the whole board of stocks was down. The list just goes on and on. But the S&P 500 has no doubt just taken off. Now it's up 68% since its lows, while all these other companies simply have not. Now, the reason why I think that's really interesting is because the majority of these gains, though, in the S&P 500 comes from something like NVIDIA. So there's been tons of stats coming out that this run-up in NVIDIA, and also if you consider the run-up in Microsoft, and also if you consider the run-up in Google, and if you even consider the run-up in Amazon, about I think like 40% of the S&P 500's gains, and by extension, the NASDAQ 100's gains are attributed to these large market cap stocks exploding. Apple as well. That's another one I should be showing. But NVIDIA has really now carried the indexes higher as of late. Well, that's interesting to me because it takes me back also to something that's very true and dear to my heart, which is that I'm just not a believer in everyone just crowding into these same stocks over and over and over again, following the same companies, or mindlessly plowing money into the S&P 500, and then the S&P 500 essentially just plowing that money into the same stocks, or the NASDAQ 100 just plowing that money into the same stocks. It's just everyone's just sort of shoveling money in without much actual diversification. If you buy the NASDAQ 100 and if you buy the S&P 500, there's like literally no difference between the indexes at this point. They are the same thing. Their top 10 holdings are almost identical at this point across NVIDIA, Apple, Microsoft. It doesn't seem very healthy. If you want a great stock market, if you want a great economy, if you want to see new businesses, new things happen, more people making it, you want to see a breadth expansion, more companies making these types of comebacks, not necessarily these large companies. The market caps of, say, NVIDIA, Microsoft, and also Apple, when combined, are essentially greater than several thousand stocks in the stock market combined into one. So 3 companies are greater than several thousand small cap companies. If you were to look at the IWM, I don't like the IWM as an index. More on that later. I also posted on my blog about it. But the point of this video is I think for 2025, a trend that I am looking into is what types of companies are coming out of the post-COVID crash and trying to make a comeback of sorts. I think that basket of stocks is rather interesting. There's Ring Central. Ring Central is another one. Look at this post-COVID run. I mean, this is mind-boggling. So let's just see where's COVID starts in. Let's see, COVID starts 2020 or so. So it's up some 150% into COVID. And now what's it down from COVID? From the top here, it's down 93%. Now Ring Central does have a little bit of debt. So I'm not going crazy about that, but you go to their total revenue quarterly and let's see look at this revenue trend. So this thing has a market cap of 3 billion. And let's just see this total revenue. And they're doing 608 million in revenue a quarter. So their growth rate slowed a little. They went from 9%, 5%, 9%, 4%. They're down to 2% or so. Probably try to push that to 3%, 4%. But they're doing $600 million in revenue a quarter. I'm sorry, but if I'm doing $600 million in revenue a quarter, I promise you I'm going to find ways to make that into a profitable endeavor. 600 million every 3 months. I think anyone with a computer and Excel spreadsheet, if they had that coming into their business, is going to find a way to turn that 600 million into like just minting cash. And it is a great service. I actually had to use Ring Central in kind of a difficult part of my life. Another time for that story. But the point is Ring Central's one. There are plenty more that just fall into this basket. Let's see if I can find another one that really, I've been looking at them. So let's see here. Was Nice one or 8x8? 5.9, I think, was one. Here's another one post-COVID. You can just see it. It was an absolute darling during COVID. Let's just see here, up 231%. And then from the highs all the way down to minus 87%. So just destruction across the board, across some of these stocks for the last few years. But the interesting thing though is, are these real businesses? Like, are they going to crawl out of the mud? Actually, the great one to look at that I was just examining is DoorDash. I mean, DoorDash it IPO'd here in 2020. It had this run. Look at this drop, this arrow I drew. DoorDash down. So DoorDash was minus 80%. 80%. People thought DoorDash was basically done. The market, they're shorting it. People are selling it. They're out of it. Let's just go buy NVIDIA. Quietly in the last 2 years, and DoorDash is up 300%. Just out of nowhere, 300% move, just like that. Uber, I think, is another fascinating one. People thought Uber was literally dead. Look at this. So you have your COVID in 2020. It goes up. Here's this bear market, minus 65%. So Uber drops 65% in that bear market. More than half of its value, gone. Off the lows here, it's just done a 285% move. This is getting very, very interesting. There is a basket of stocks that is coming out of this COVID slumber that haven't gone away, that haven't died, that are proving they have real businesses, that are proving that they actually generate significant cash. And if they can keep crawling through the mud, you might find a move like this. Now, this is the important part. The Uber move is over. I think the Palantir move is over. Palantir has already made this move off the lows. I mean, epic move. There are more that have, the Carvana. Carvana, this is not a move I'm interested in anymore. They've already made their move off the lows. Look at this. It's the pattern, you might call it, is like the great U. Here's the U. Look for these U patterns in development. I think more companies like Zoom have a real chance to create sort of an epic U pattern. I also think that companies potentially, even like, what was some other ones that we were looking at? Let's see. Is Nice another one I was looking into? Nice kind of already tried to make it here. It's an interesting one, though. If you log it, it's going to look better. That's the other lesson for this when you're going through these charts. You're going to find that when you turn on logarithmic scale, that it's not as bad as you thought. So this one was fascinating to me. Is it 8x8 that I was looking at, or was it 5.9? Let's see. No, it wasn't. It was 5.9. This was the post-COVID one. So if you look at 5.9, this chart looks just disgusting, right? It's got this huge run up into COVID. It's got the classic crash down here, And then maybe if you want to say the U pattern is coming up, that's up to you. You got to do your own research on that. But what's super interesting about these charts, I'm just going to, as a tip before I get out of here, is if you're going through them looking for potentially these moves, is turn on the log scale too. Because when you turn on the log scale, you realize like that's not even that bad of a move. I mean, all of the IPO holders from 2014, all of the buyers, even 2015, 2016, 2017, 2018, they're technically still in the green. So that's a significant portion of holders who are still in the green. It doesn't look nearly as devastating, right? You can just see. And remember, logarithmic is adjusting the price scale to a percentage change price scale, not a nominal change price scale. So you can really see the percentage gain over time. And that way you don't get sort of tricked just by the dollar for dollar move, because you want these percentage moves at the end of the day. I think that Zoom, if you go to log scale, still looks pretty interesting. But Zoom is for sure high up on my list. I think that when you have a company that has this much cash on the balance sheet, isn't going away. I just had a Zoom call with a financial advisor the other week. It's still entrenched in industries. They've got a user base. They can just keep building on that user base. They're already profitable. You know, they just have to grow at 7% a year, and they're well on their way to doubling. So that's the end of this video, and I'd be curious to know if you have any post-COVID stocks that you're interested in. But I hope to update this video shortly with other names that I'm looking into and thinking about. And that is my first video of 2025. So thanks for watching.